Hey, this is Matt from InvestiQuant. Today is Tuesday, October 13th, 2020. This morning we saw the markets gap down in 3 of the 4 instruments, the NASDAQ being the only one that gapped up on the day. And since then, we've seen some kind of quiet action. There's been a lot of consolidation lower in the S&P, a lot of consolidation in the NASDAQ. The Russell tested lower and is lifting, and the YM is consolidating lower as well. But majority of these are consolidating underneath their opening price following yesterday's sizable move higher. So what I figured we'd look at this afternoon is that same idea from this morning where you have a large rally and then it's followed up by some weaker activity the next day. So let me set this up in Discover. And I'm going to go straight back to that alert that we looked at this morning from the My Alerts section for this large move higher. I'm going to come back here and I'm just going to load this back into Discover. That will put right back into Discover the rules that we were looking at for off of the open, which favored larger moves to the downside today. And then I'm going to take this and adjust it to what has happened this morning and into this afternoon session to just add a little bit of context around it. So now that I've got this day after largest rally in 20 days already added and above a 200-day simple moving average, these were loaded in my alerts, I can go up to symbols and settings and just adjust this a little bit by adding the additional markets. I can change the setup on it to the intraday time-based entry, and we'll look at an entry at 3 p.m. Eastern time. We'll set it up as a long again. Since I changed the setup, I do need to adjust my exits, and I'm going to go back to an end of day stop and target for this. Then I'm going to go into the post open filters, and I'm going to say that we are trading below the opening print. So we have a red candlestick forming, and we are trading in the bottom half of the intraday range. So I'm going to come down here, select close and bottom half of the intraday range, and then I'm going to click view results. And here we go. So these are the results of going long at 3 p.m. Eastern time, exiting at the close, which is 4:15 p.m. Eastern time, when the prior day was the largest close-to-close rally of the past 20 days. That took place above a 200-day moving average. And then intraday, you are trading below the open and in the bottom half of the intraday range. Again, this is an entry at 3 p.m., so I'm not sure if we're going to be in the bottom half of the range and below the open at that time, but currently we are. And if we are, these stats would be applicable to today's session. So historically, 66 samples in the S&P. We've got 59 in the NASDAQ, 55 in the Dow, and 61 in the Russell. So pretty similar sample sizes there. And these look a little bit weaker on the win rates than what we saw off of the open. Off the open, this pattern showed about a 50-50 win rate, but the average loss was much larger than the average win for the different instruments. Here, we're seeing the win rate on these are a little bit weaker, with the S&P coming in at 41%, the NASDAQ 44%, the Dow 42%, and the Russell 49%. So these are all weaker win rates than what we saw this morning. And then if we look at the average win to average loss, that's what was really skewed off of the open. We're kind of seeing the same thing here into the afternoon. So we're seeing the average loss is larger than the average win. In the S&P, that is also true in the NASDAQ as well as the Dow and in the Russell. So all of these have less than 50% win rate, some of those weaker than others. And the average loss on all of them are larger than the average win. So this is giving you these equity curves that are just moving from upper left to lower right consistently down. This has been a pretty weak pattern into the close. Let's take a quick look at the results distribution, and I've got the S&P selected here. And you can see here the taller bars definitely happening on the red bars. So the red bars represent the losing trades, and the taller the bars, the more frequently that trade result has happened. The trade results are on the bottom here on the horizontal axis. Dead center is 0, so that's right here, with the tallest bar right next to it being a small loss. And then as you move to the left, the losses become larger. As you move to the right, the gains become larger. So if we look at this, we can see one standard deviation highlighted here in blue, and there is a lot of red bars taking place here. The red bars are comparatively taller than the green bars in there. This one's quite a bit larger than its corresponding green bar. The second one to the left is 7 samples compared to 8, so the green bars are a little bit larger there. And then as we move further down, you can see the red bars stay taller than the green bars. So historically, you can see the results have favored the downside. And you can also see there are some more outliers here on the downside as well compared to on the upside, where there's quite a few blank spaces here where you don't have any results whatsoever. So historically, this pattern has favored the downside into the close. Hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.